All right, awesome. Hi, everybody. This will be a topic lecture on the November-December public forum resolution, which is resolved increase United States federal regulation of cryptocurrency transactions in our assets will produce more benefits than harms. I'll be honest, after looking at both topics that were potential options, I thought the other central bank currency topic would have been slightly more interesting, but this is how the vote kind of turned out. So this is kind of where we'll roll. And I'll kind of explain some of the reasons why I think this topic will be a little bit interesting to debate. But I do think that gaining kind of knowledge of cryptocurrency, is a good topic of debate. It's an area of increasing importance in our society, and something I think that'll impact future generations just outside of debate as well. So with that said, though, let's kind of talk about some background information before diving into some specific arguments on both the pro side and the con side. So first of all, we want to talk about and just define what is cryptocurrency. So just at a most fundamental level, a cryptocurrency is a type of digital currency created from software in which a network of independent computer nodes confirms transactions through a decentralized consensus mechanism. So essentially, historically, the development of cryptographic technology allowed for the development of cryptocurrency. Cryptocurrency uses blockchain-like technology. It was created in the mid to 2008, 2009, after an anonymous paper was published that kind of talked about Bitcoin as an example. But Bitcoin is just one example of cryptocurrency. There's, as many of you probably know, there's a lot of different examples of cryptocurrency, but they all kind of operate through the same distributed ledger technology known as blockchain, and they allow for certain transactions. And it's kind of an alternative to using more commercial banks. So like maybe you have a debit card or and use a traditional financial institution, or using fiat money like maybe paper money to engage in transactions. Okay. So what is blockchain? So blockchain is distributed ledger technology that allows cryptocurrencies to work. The way I like to think about blockchain is that it's the technology that underlies cryptocurrency, but there's a lot of different applications of blockchain across besides cryptocurrency, right? So there's a lot of applications in terms of like managing the supply chain or being used by companies, right, in order to preserve data. So I think blockchain is a technology that really got its start because of cryptocurrency, but I think a lot of people and experts would claim that blockchain technology, even if cryptocurrency doesn't get widely adopted, blockchain technology alone will allow for a lot of, it has a lot of potential to transform a lot of industries. For those of you that might be familiar with like a spreadsheet, so this would just be a spreadsheet that exists on a network, right? So a series of computers, and it's really secure because you can always add rows, and that information is being validated on each of the blocks that are kind of created, but you can never like modify existing rows. So it's secure in that respect. It's all stored on the blockchain. Okay. So next up, we'll talk about the different types of cryptocurrency. So as we talked about before, there's a lot of different types of cryptocurrency. So cryptocurrency has a limit on the amount of coins issued, Bitcoin. And so in that respect, that type of cryptocurrency gets its value via scarcity, right? So it's only because there's a certain number of Bitcoin. If you own a portion of that Bitcoin, your value is derived based on the scarcity and then what people are planning to pay, right? That differs, if you remember from the previous lecture, we uploaded to the Debatus website, but I'll just kind of review from traditional fiat currency, which traditionally either got it legitimacy through its value in relation to something else. So the US dollar, for example, had its value because of the gold standard for a long time. But then it was when it transitioned into a fiat currency, it got its value due to just legal authority and through legal tender, which is the idea that you can use the dollar to pay off your debt, just more generally. And it has its basis in legal authority. So cryptocurrency usually has its basis in, or its legitimacy in scarcity. But there's also cryptocurrency that has no limit on the amount of coins. So like things like Dogecoin. Then there's also another example called stablecoin, which I'll talk about in a second. But stablecoin are backed by another asset, right? So traditionally, stablecoins are usually pegged to a traditional fiat currency. So we'll talk about two examples a little bit later of cryptocurrencies that are pegged to the US dollar. And so their value is derived based on the value of the United States dollar, not its value kind of independent of that. And we'll talk about some of the aspects in terms of regulation of these specific types of cryptocurrency and things that kind of that regulators fear when they talk about stablecoins. Cool. So more generally, though, I think it's also important to define just generally what is a transaction. So a transaction is just usually where there's a buyer, there's a seller, they engage in some kind of transaction. So you might get a certain product, maybe you buy a shoe from Nike, they give you the shoe, right? You give them money in return. So transactions also recur like the purchase or sale of cryptocurrency. And generally in the United States under United States federal tax law is any kind of transaction that you make, any income that you have, it's taxable, right? And certain transactions are, are taxable, especially. So all transactions are technically taxable in the sense that if you found a $20 bill on the ground, like technically that's income that you should have to pay taxes on. But generally the IRS doesn't get involved unless it's a large transaction, right? So, so in this example, there's been proposed regulation by the current Biden administration to mandate the reporting of cryptocurrency transactions in excess of $10,000 US dollars. So this would be reported to the IRS, and you would pay some kind of capital gains tax on that exchange. So just generally what a capital gains is like, imagine you buy, let's say, imagine you buy a painting for $1,000, and then all of a sudden 2 years later, you sell that painting for $3,000. Well, you would pay a tax on the amount of gain that you realized in that transaction. So in that case, you would pay tax not necessarily on the base 1,000, your base in that asset, but you would pay tax on that $2,000 difference between what it appreciated at, what you sold it at, versus what you bought it at. And so in the context of cryptocurrency, if you buy, let's say, one Bitcoin, which is going at market value of like $3,400, $3,500 US dollars, and all of a sudden that appreciates in value, you have to pay capital gains tax on that relative gain or loss. If you have a loss, it's treated as a deduction for tax purposes. Also, some other regulations, maybe there's some kind of identification verification type of regulation, so that you have to provide your identity in order to exchange your cryptocurrency assets. That might be beneficial because, as we'll talk about, one of the downsides of cryptocurrency is that it's sometimes been used to I guess, facilitate illegal transactions. So a couple of years ago, there was a site called Silk Road, which was essentially a dark net site that was used Bitcoin in particular to exchange things like drugs, weapons, things like that. And it was all financed through a cryptocurrency under the guise of that cryptocurrency is anonymous. It's an anonymous asset, which might not always be the case, but at least that's kind of the perception. And also just generally transactions, if you know. So in order for cryptocurrency to get its legitimacy, as we talked about, it's through blockchain technology. And blockchain technology exists through a network of computers. And you can actually use your computer to verify certain transactions. That's called like maybe Bitcoin mining. That's called cryptocurrency mining. And it's using your computer to verify transactions to help create parts of the blockchain. But there's a lot of evidence out there that these types of transactions and cryptocurrency mining more generally is a huge negative effect on the environment, right? Because if you think about it, it causes a lot of electricity, right? And the electric grid is based on fossil fuels, right? So it's contributing a lot to the environment. And so there's some evidence out there that makes claims that if cryptocurrency were to be adopted worldwide, it would prevent efforts to fight against climate change, potentially significantly exacerbate the effects of climate change. So I think there's arguments about how maybe regulation could result in maybe lessening the environmental impacts of cryptocurrency. Okay. Yeah, and again, if anybody has any questions, I'm happy to answer along the way. Okay, so next up, we'll talk about what is a security. And I think this is important to define because it is proposed a lot in the regulation literature, right? So a lot of people say maybe cryptocurrency should be treated and regulated as a security. So a brief definition of a security more fundamentally is a tradable financial asset, right? So think things like stocks, bonds, derivatives, or any other financial instrument, like a mutual fund, something like that. A derivative, for those of you that might know, it's not like in calculus, like you might, take a derivative. It's not that. It's like something like an option, right? Which maybe gives you the ability to purchase a stock if it reaches a certain price, right? So you could buy an option of a certain stock that allows you to buy it at a certain price. That would be a derivative because it derives its value from something else. And so a lot of people think that cryptocurrency is really a security, right? Because it's not really a currency in the sense that you don't just like get some US dollars to hold so that it appreciates value necessarily. But you might buy some cryptocurrency in the hopes that it'll increase its value like a stock, and then you can sell that back and get that in US dollars. And so people think then that it should be regulated as a security, right? So you might think, right, who is the actor that regulates securities? And there's a federal actor for the federal government that acts as the regulator of securities, and that's known as the Securities and Exchange Commission. The SEC is also how it's called. So just a little bit of historical background. The SEC was created following the Wall Street crash of 1929. So in response to some of the banking collapses, the SEC was created as a means of protecting investors, right? So if you're investing your life savings with the hope that maybe by the time you turn 65, you might be able to retire, well, it would be really unfortunate if by the time you turn 64, all of the money you invested was used for like corrupt purposes, all the companies went bankrupt, and now you lost your entire life savings. So the SEC is really there to protect investors so that their money is able to maintain its value and really appreciate in value over time. And that companies that are exchanging their stock, that all available information is provided to the investment public, right? And the investing public, such that they can make informed investing decisions. So more recently, in 2002, there was a series of scandals in the United States financial system. Most notably was Enron, but there's other examples, WorldCom, examples like that. But I'll talk about Enron for a second. So Enron was an energy company that was engaging in a lot of fraudulent transactions. And even their auditor at the time, Arthur Andersen, was kind of caught up in this scandal. And it was found out that they were lying to investors about the financial profitability of Enron. And it was a huge scandal in the early 2000s. And it really led to some kind of regulatory framework, right? So the Securities and Exchange Commission kind of intervened in order to protect investors and the investing public at large. So a couple of things that they did. One, they mandated that all publicly traded companies are to have independent external audits. So a public company is something that exchanges its own publicly, so you can buy shares of that stock. It's traded on an exchange. So for example, in the United States, there's a lot of exchanges. There's like the NASDAQ, but most prominently you have like the New York Stock Exchange. You might have heard of like the S&P 500. That's a list of like the 500 largest publicly traded companies. And it's mandated that all publicly traded companies have this kind of audit, right? So audit by people that are not, in the accounting department, but by an external auditor. It also has certain rules for the auditor as well in terms of like independence and other like kind of regulatory rules. It enhanced efforts of whistleblowers to be able to report instances of wrongdoing. But I think Sarbanes-Oxley more generally, also known as SOX, was done to protect investors, right? And so I think a lot of people right now are talking about cryptocurrency kind of in the same light, right? That perhaps the Securities and Exchange Commission, this actor that regulates securities, could expand its regulatory ability in order to regulate cryptocurrency transactions to protect investors or people that own cryptocurrency and just the general public more generally, right? And I think that's what a lot of the literature kind of starts at. You might hear a lot about the SEC. It's not, the Southeastern Conference, right? We're not talking about college football or Alabama. We're talking about the Securities and Exchange Commission and their role in protecting investors. And as we talk about the actor kind of regulation, a lot of the literature points to the SEC as a potential actor for enforcing this type of legislation that might regulate cryptocurrency. Okay. So next up, what is an asset? So an asset just generally is defined as a financial resource for an organization or company. In terms of cryptocurrency, assets are things like coins, hardware, the technology, etc. So in terms of asset regulation, so generally there's not regulation for the exchange, like typically like there's not a regulation of like the New York Stock Exchange. Generally, there's regulation on the entities that maybe produce that list their stock on the exchange. So in the example of cryptocurrency, there could be regulations for Bitcoin or Ethereum or Dogecoin, whatever the example might be, and regulation, right, of that or regulation of the exchange. Okay. So next up, types of cryptocurrency. We talked about this in general, just a review. Values pegged to some other form of fiat currency. So the example is Binance USD, value is tied to the US dollar. People say then that might be less volatile than say cryptocurrency like Bitcoin, which kind of exchanges its value, goes up and down. Okay. So some resolutional analysis, some of my observations. So this is kind of why I think this topic is maybe not the best, but I think it's important to note, right? So one, I think the topic is ambiguous on the type of federal regulation, right? So regulation can mean a lot of things, right? So it's also maybe not even necessarily positive or negative, right? You could regulate something to try to incentivize more people to use cryptocurrency. You could regulate it to make it tougher to misuse, right? It could go in a lot of different directions. So the type of federal regulation isn't clear, right? And I guess the difficulty is in the type of debate that we all participate in, public forum debate, debaters can't read a plan, right? So in policy debate, you could read a plan of action. You could say, I propose that the United States federal government should regulate cryptocurrency transactions by mandating that any Bitcoin miner is using renewable energy sources like on their for the energy that is produced, something like that, right? So to limit the amount of greenhouse gases that the environment would use, and you could derive benefits from that specific plan. Unfortunately, in public forum debate, you don't have the opportunity to do that, right? And that makes things a little bit more difficult, I think, because I think as you'll start doing research, there's a lot of different regulatory proposals surrounding cryptocurrency. It's very broad. It could be Congress passing a law. It could be the SEC just kind of doing something independently. It could be the U.S. Treasury, right? It could be regulation on stablecoin. It could be regulation on the identity of people who buy cryptocurrency. It could be certain things that try to enhance investor protection, right? So the type of federal regulation isn't clear, right? So what I would recommend that you to do is when you're doing your research, right? What you want to do, I think, that would allow you to advocate a specific line of action is some kind of probability evidence, right? The number 5 point I have listed, probability evidence for the type of regulation that it's likely to be implemented, right? That it's likely to be implemented. As an example, if you wanted to say that you think that there should be cryptocurrency, regulation of cryptocurrency to allow for more investor protection, you also might want to have a piece of evidence that suggests that it is likely that the Biden administration or the current, the chairman of the SEC, wants to regulate cryptocurrency to make it better for investors. Like, it's probable that if there is a type of regulation, that this is the type of regulation that is likely, right? So that's, I think, the approach that I would take is, if you're going to make a specific proposal, you want evidence that that type of proposal is likely if just general regulation were to happen. I remember back when I debated, there was like a topic about investment in infrastructure versus welfare. And I didn't do that great on the topic, right? Because I was like, making very specific contentions about, we had a contention about like the welfare program, weatherization assistance program, which is like basically provides insulation to poor people's households. The problem was that we had no evidence that that was likely to happen if like welfare were to get more funding, right? So I really think that if you want to do debate, to debate well and make even a unique argument on this topic, you want evidence to support that that is a likely policy outcome if general regulation were to happen, right? I don't think that you get a fiat. So fiat is the Latin word, let it be done, a term thrown around in debate, a specific policy proposal. I think you get to fiat just generally that regulation happens, but I don't think you get to specify the type of regulation. So I think you want to find evidence that supports that specific type of regulation that you're advocating for. Okay, a couple of other observations. I know that was a little long-winded. Also, the actor isn't clear. So who's doing the regulation? Is it a piece of legislation imposed by Congress? Is it just the SEC increasing their power? Is it the Federal Reserve? Is it the U.S. Treasury? Right. So it's not that clear. So again, you might want to evidence that suggests a specific actor as well. And I just think in general, a lot of debates will be about, what type of regulation is allowed, right? So the negative team might say, oh, this type of regulation is bad, whereas the affirmative might say this type of regulation is good. So I think it's important to say this is a more likely type of regulation that were to happen, and here are the benefits that come of it. Or another strategy is just go general, right? Just in general, regulation is bad for these reasons, or in general, regulation is good, right? Using my example as before, I think in the welfare example I just provided in that topic, I think teams that did better were teams that just generally said, like, here are some reasons why welfare is a good approach at fighting inequality. So I think in general, like on this topic, just general reasons why regulation is beneficial and harmful. Okay. So regulation is defined as a rule or order issued by an executive authority or regulatory agency of a government and having the force of law. So here's an example. This was a House bill that talks about certain types of regulation. All right. So now that we talked about that, let's go into the actual arguments. One other thing I'll say is on this topic, might be one of the topics where I think debaters might know a lot more about the topic than judges do. Maybe you are interested yourself in like Dogecoin or any other types of cryptocurrency. Judges might have a general idea, and some judges might have no idea what cryptocurrency is. So keep that in mind when you're making arguments. And I think just in general when you're, especially in front of lay judges as well. Okay. So first of all, let's talk about some pro arguments on the topic. So one of the first major pro arguments that I think there is out there is this idea of investor protection. So this is just the idea that in general, investors are harmed from unregulated cryptocurrency markets and exchanges. So there's a lot of evidence that suggests that unregulated cryptocurrency leaves investors vulnerable to things like hacks, to things like currencies just taking a bunch of money, like a random new cryptocurrency comes into being. It raises a lot of capital from investors, and then it kind of just goes up in shams. Or that there's not a lot of disclosure on their on financial information or information about the type of currency. It just leaves investors vulnerable. They're unable to make informed investment decisions. So regulation, maybe then one advantage of it could be is that not only does it protect investors, but because it protects investors, that attracts more investors into the area. So especially, institutional investors. So large investors of capital, not individuals, but large investors of capital. So think like banks, other, financial institutions, pensions, mutual funds. Regulation of certain cryptocurrency could lead to more investment, right? And then I think that allows you to just make some of the general reasons why cryptocurrency is good, right? It helps expand banking access to millions of people. I kind of talked about some of the general reasons why cryptocurrency might be beneficial in a previous lecture. So I think that, just generally increasing investment into the area of cryptocurrency could be a good argument. Okay. The next argument I think you could make is that cryptocurrency regulation will be necessary for things like investor protection. So one of the problems of the status quo is that it lacks effective safeguards to protect against fraud and abuse. So this argument kind of makes the claim that the current market surrounding cryptocurrency is like the Wild West. It's just unregulated. People are doing what they want, when they want. And so the Securities and Exchange Commission, the SEC, could provide some kind of guidance, some kind of regulatory framework, right, that seeks to protect investors and consumers, reduce crime, promote financial stability, protect national security, right? So all benefits of cryptocurrency. Okay. The next pro argument is that it prevents illegal and illicit activities. So as we talked about, one of the general appeals of using cryptocurrency is that it is more anonymous than other forms of currency. So if you use if you Venmo'd somebody, or if you wrote a check to somebody to buy, let's say, a weapon, or to buy some illegal drug, right? Well, that money, you left a paper trail, as they call it. The government or the police might be able to figure out that, hey, you sent this person this amount of money, and that was likely used to purchase drugs. Cryptocurrency, on the other hand, it is a lot more anonymous, right? So one of the appeals of cryptocurrency is that it allows for the exchange of goods without revealing your identity. All you need is a Bitcoin wallet in order to exchange Bitcoin, right? And your wallet doesn't necessarily need to be tied to your identity. You could create an anonymous profile and send money that way. So one of the benefits then of regulation is that it could allow the government to kind of intervene in some of these exchanges, maybe provide some kind of verification of identity in order to essentially identify certain people who are participating in cryptocurrency transactions and prevent that from happening. Okay. So this evidence says that it could help minimize tax evasion. So in addition to just fostering general legal activities, using cryptocurrency identification requirements could help people from evading taxes, right? So in the example I previously provided, if you have an anonymous Bitcoin wallet, well, that information isn't readily available to the IRS, the Internal Revenue Service, the agency responsible for collecting taxes on US citizens. They might not know that you made income if you have like an anonymous account. So verification requirements could help tax evasion, to help fight against tax evasion. And so this says, the IRS has shown a clear interest in learning about taxpayers' use of cryptocurrency, and it would raise $700 billion to $1.6 trillion in the first decade and in the second decade. And that might be good because you could fund education or fight prevent spend down the national debt, etc. There's less tax evasion. So this is the argument about tax evasion. Just people don't report their earnings through anonymous cryptocurrency channels. Regulation would allow the IRS to get clear ideas of who is engaging in cryptocurrency transactions and force them to pay taxes on either their earnings or money that they maybe have received through the exchange of a good or service. Okay. All right. So the next argument we have is racism. So I think this is the argument that in addition to fostering certain legal activities, just like the purchase of drugs or weapons, cryptocurrency have been used to fund terrorist organizations and even white nationalist movements have been founded and funded through cryptocurrency exchange. So Daily Stormer, which is a prominent right-wing extremist website, is funded exclusively through untraceable cryptocurrency. So general regulation could help prevent and fight against terrorism, both domestic terrorism and maybe all forms of terrorism. So that may be one of the benefits of cryptocurrency, and it prevents, hate crimes against marginalized communities. Okay, next argument about stablecoins in particular. So as we talked about, stablecoins are cryptocurrencies whose value is derived because that cryptocurrency is pegged to a national fiat currency. So there are types of cryptocurrency that derive their value from the US dollar. And a lot of people are worried about these types of cryptocurrencies because some of them don't have, because if its value is based on the US dollar, the idea would be that you should be able to exchange your cryptocurrency immediately for a dollar, like 100, whatever, Binance coins or USD coin or whatever for 100 US dollars. Like, let's say if they were 1-to-1. Unfortunately, though, like there's been some evidence that some of these exchanges, this currencies in particular, they don't have that big of reserve of cash and cash equivalents, such that if everybody wanted to exchange that form of cryptocurrency for US dollars, they would not have enough capital or cash in order to meet that that short-term obligation, and that is bad for investors, right? So a regulatory framework could require that these companies have sufficient reserves to meet their existing obligations to people that own that form of cryptocurrency, and that is good for stability and prevents volatility, protects investors. Okay, so that's just an argument about investor protection, just applied to stablecoins in particular. So this evidence just talks about stablecoins, digital currencies pegged to national currencies like the US dollar, seen as a potential risk, not just to crypto markets, but to capital markets as well. Bringing together regulations will enable us to access the benefits of stablecoins while mitigating the risk they could pose to users, markets, or the financial system. And this talks about the value is already up, a lot. And the key, I think, idea here for this argument is this idea of liquidity. For those of you that aren't as familiar, liquidity is like your ability to get cash, right? And you might think, like, why is cash important? Well, cash is important because it allows you to, for a business or really for anybody, it allows you to meet your existing obligations. So if you have to pay and make an interest payment on a loan you have, you need cash. If you own a business and you need to pay payroll to the people that work for you, you have to pay them a salary, or you just have to pay them, their weekly wage. You need cash in order to do that. So cash and liquidity is an important aspect of companies and, just individuals meeting their existing obligations. So it's a key metric of how well maybe a company is doing. Or in this case, stable coins have to be liquid in order for them to get their value, right? If you like had, a bunch of, let's say, USD coins and you try to exchange them for US dollars and they wouldn't let you, right? That would obviously be a problem, right? That's not good for investors. The value would plummet. Okay. Oops. Okay. So the next one is we have this argument about the rule of law. So this is just the idea that governments cannot have completely independent financial system, or there's just no way to prevent crime, terrorism, basic order taxation, right? I think this is also one of like the con arguments, is that just in general, one of the major reasons why cryptocurrency was created was to avoid the control of national governments, was to provide an avenue for people to exchange money and without the use of a central bank, or like the Federal Reserve in the case of the US. So this is just like maybe a reason so you can make arguments in the con side why any kind of centralization is bad. But on the pro side, you could just make the argument that like, look, centralization is good and decentralization is bad. Okay. So next, let's talk about some of the con arguments. So first of all, I think one of the main con arguments is just like this idea that, but I'll stop for a second actually. Does anybody have any questions on the pro side? You can put them in the chat if you don't have any. If you don't want to speak out loud. I'll wait a second. Okay. So I'll move over to the con arguments if we don't hear anything. So first of all, I think just in general, nobody really cares about US federal regulation. So again, one of the appeals of cryptocurrency is that it's decentralized and that it evades regulation. And so China has already banned cryptocurrency, and really nobody really cared. That didn't really stop the use of cryptocurrency. The value of cryptocurrency slightly went down, but it's still trading high, right? So I think this is the idea that cryptocurrencies could operate in a different country, right? So they don't have to be located in the United States in order for people in the United States to buy Bitcoin or to buy Ethereum, right? Exchanges are encrypted, right? Just that's one of the benefits of them. So I think this is maybe a defensive argument, but I think it's a good argument to make, just that, right? That's regulation isn't going to solve for the problems that you've identified. The pro team says it's going to solve for crime, but it's not. Crime's just going to go overseas. It's going to be even harder to regulate. So the only thing you're doing is maybe harming the US economy through competitiveness or something like that, right? Et cetera. Okay. We got a quick question in the chat about when will the briefs and evidence be posted. They'll be posted in the coming week or two. We'll also be doing another demo debate on the topic as well. Okay. So here's a specific disadvantage of cryptocurrency regulation, just that it pushes cryptocurrency companies that are based in the United States, causes them to relocate overseas. If they have to be regulated, they want to have forced to show people's identity, they're just going to move, right? And so, on one hand, that means that it's not really going to be effective. And two, it's perhaps bad for the United States economy, right? Because you don't get the benefit of having US-born companies. So here's an article that makes that types of argument. So regulation would drive cryptocurrency developers and investors offshore because of the tremendous compliance costs and the harms to individual privacy and data security. Experts see cryptocurrency financing as important to blockchain-based projects, from land titling to medicine. Over-regulation and punitive taxation could curtail its valuable pipeline to continuing American progress. Businesses relying on smart contracts and other blockchain-based technologies might ultimately move to alternative jurisdictions with friendlier rules. Development would significantly hamper America's lead in fintech and other industries that would benefit from these technological breakthroughs. So I think this evidence is actually really good. And I think what it does is it talks about something I talked about earlier. It's just that blockchain is independent from cryptocurrency. So blockchain is the technology that allows cryptocurrency to be used, but it has a lot of other applications. So among those, as the article mentioned, are things like smart contracts. So smart contracts are like, you won't get paid until X, Y, and Z conditions are met, that you shipped the goods, that the goods were ethically sourced, et cetera. Smart contracts are a really good way to protect a lot of businesses, right? It's different from cryptocurrency, but it relies on blockchain, that distributed ledger that we talked about, in order to function. And so this argument is making the point that regulation is not just bad for the exchange of cryptocurrency, but regulation could halter or could stop the widespread adoption of blockchain, the underlying technology that allows cryptocurrency to function. And blockchain has a lot of other applications beyond just the realm of it being used in cryptocurrency. So it's being used in land titling to medicine. There's an article about how, blockchain could allow you to see if like your goods are ethically sourced, right? Because let's say it was produced in a developing country and then shipped to an intermediary in order to package and then shipped to, let's say, where you live in the United States. In a future where you have blockchain, you could like scan a QR code and see everywhere that it's been, right? To see whether or not it was ethically sourced, right? So you can imagine some of the benefits that blockchain could have in transforming the way in which American commerce is conducted, right? Because it's this distributed ledger, but it's secure. You can't change the rows of data that are already added up. It has a lot of potentials. And so not only would cryptocurrency regulation stop, not really be effective at preventing crime, it could prevent the adoption of blockchain, which is so good for a lot of companies and the economy in general. Okay. So let's go to the next argument. So the next argument we have is this argument about self-regulation. So this argument just states that the type of regulator for cryptocurrency should not be a central government, right? One of the benefits of cryptocurrency is that it's decentralized. And so the regulators should be the people that use the cryptocurrency. This argument kind of reminds me a little bit of like people who like engage in the free speech debate. It's just the idea that like government shouldn't regulate speech, but it should be the marketplace of ideas that, it's the idea that if you wanted to say something problematic, the government shouldn't say you can't say that, but you probably won't say that because everybody else would maybe like say that like you're a terrible person for saying like something terrible. So this is just saying that like that type of regulation that should be done should not be done by the central government, but by maybe cryptocurrency exchanges like CoinDesk. So here's a piece of evidence that kind of makes this argument. So it is not clear that third-party governments more used to regulating fiat currency, so like regulating like US dollars, are best placed to undertake the activity of regulation. A case exists for self-regulation of cryptocurrency exchanges. Self-governance tools include internal rules applied by the market operators and the disciplines exerted by those choosing voluntarily to trade on them. So as you'll see, okay, so one of the arguments I think that this article makes is just that for new technologies, the government is uniquely not like a good actor for regulating them. They just don't understand them well enough to change people's behavior sufficiently to prevent a harm or to promote their benefit. I think if you just take a step back and think about like the US Congress, I think it makes sense, right? Like, I don't know, I was on social media a few months ago, and I remember watching like Congress hearings on like social media companies and just hearing some like older representatives or senators talking about social media. It's very clear they don't understand like social media, and that's like a lot simpler than just cryptocurrency, right? Like they'll like even like last week on the House floor, somebody was asking about like what is a Finsta account, like by examining a Facebook executive. Right? It's very clear they don't understand like some of the just like things that people that use social media or use cryptocurrency do. And so I think the argument is that like the government is not a good actor because they don't sufficiently understand some of the nuances of this type of technology. And so instead, the people that should be regulating it are the cryptocurrency exchanges. They should create their own rules, and people will follow. I think like a good example of that in another industry, in another context, is like Reddit, right? So Reddit's like not the central government, obviously, but they have like people that moderate certain Reddit forums to, based on a certain set of rules that are agreed upon by members of the community. So that's like a self-regulating community. So you might think like, oh, is this a counter plan? Like, how can I make this argument in debate? And I think, as I said before, I think you can make the argument for self-regulation if you prove that it's likely to happen based in the status quo. So here's a piece of evidence that talks about the VCA, the Virtual Commodity Association, that was created in 2018, that is already seeking to provide this kind of self-regulation as an alternative to the government. So the mission is to work toward the goal of establishing an industry-sponsored self-regulatory organization for the U.S. virtual currency industry, specifically virtual commodity marketplaces. So this would be a good example of an alternative to the United States federal government that could regulate cryptocurrency, realize some of the benefits that the affirmative speculates in terms of minimizing crime and protecting investors, while avoiding some of the downsides of federal government regulation. So I think it's like, insofar as you prove that this type of alternative is plausible, it's likely to continue into the future, I think this would be a good argument to make, right? And it's not a counterplan, right? Because it's happening in the status quo. This type of alternative is happening, and it's perhaps better than regulation by the federal government. Okay. Next, we have the argument about states or federalism. So this is just the idea that states, and in particular, like U.S. states, and local municipalities, are already developing their own cryptocurrency regulations. So this is kind of a constant debate that happens in the United States. Should it be federal action or should it be state action, right? So should the states do it or should the federal government do it? Again, one of the differences between policy debate and public forum debate is you can't make a counter plan that fiats like all 50 states do a particular action, right? Instead, you need to prove that like a lot of states are likely to pass certain regulation in the status quo, and reasons why that type of regulation is preferable to broad universal action by the United States. So there's a lot of reasons maybe why this type of regulation on a state-by-state level in the United States would be beneficial, just generally for like states' rights, and that it's not a federal policy, and it doesn't hinder various industries. The next argument is just talks about kind of like a trade-off. So one of the actors we talked about was the Securities and Exchange Commission, the SEC. Also, we've talked about the IRS, but these are very like resource burdened institutions. So they, like the SEC is in charge of, validating, imposing fines to investigate instances of fraud in publicly traded companies. So if a company fails an audit, the SEC is supposed to like look into that and to levy fines on these companies. And so they're already kind of spread too thin. So forcing them to regulate cryptocurrency is just like a whole nother thing that they have to do. And that maybe is generally bad. It allows for other things to happen. The IRS, it also could trade off with, the IRS is good at preventing money laundering, things like that. And then I think just in general, some arguments I think could go both ways. So cryptocurrency could undermine the legitimacy of the US dollar. I think this is just the idea that because the US dollar gets its legitimacy based on a central government and the Federal Reserve, like a centralized system, cryptocurrency is inherently decentralized. So you could make arguments why that's good and why that's bad, right? So dollar hegemony is maybe good because it enables the United States to spread its power, to spread the idea of liberal democracy. It helps us enforce sanctions on other institutions. If the US dollar had no value, then like sanctions, which are used to fight against maybe human rights abuses by dictators, no longer have any sort of legitimacy. You can also make the argument that US dollar dominance is bad. So maybe just that in general, US hegemony, US ability to project power is bad. Sanctions are bad. Even if dollar dominance is good, the collapse of the US dollar is better, etc. Okay. Yeah. So now let's kind of open it up for questions. This was kind of all I had in terms of the presentation. Yeah. So one of the questions we have in the chat is this idea. Someone said, what if one says that cryptocurrency is bad and that regulation isn't enough and banning is better? So I think that the problem I would see with this argument is you would need to prove that the outright banning of cryptocurrency is likely, right? Like I think you run into ground or to problems where you don't have evidence that suggests that a cryptocurrency ban is likely and you just assert that it'll happen, that it's better, right? So I think if you're making an argument about an alternative, you need to prove that it's plausible and that it's likely to happen. And I don't think that there's evidence out there that suggests that the United States is just going to outright ban cryptocurrency. Yeah. And also, I think, smart affirmative team might make the argument that banning is a form of regulation as well. So it's kind of like still affirmative ground. Good question, though. Any other questions? All right. Awesome. Well, if we don't have any, are there any other advantageous websites or resources? So I think in general, I think on this topic, maybe what's different from this topic and some other topics is I think a lot of more like financial and like news sources. So like Bloomberg, Reuters, Wall Street Journal. I think these are like sources that maybe aren't used as much on other topics, but have a lot of evidence on this topic. So I encourage people to look at other news sources when you're doing research. So that's what I would recommend. I think there's a lot of articles that talk about just regulation in general of cryptocurrency. Are there any unwanted consequences about regulating cryptocurrency? Maybe that have none to do with economic impacts. I mean, like, sure, I think like you could just make the argument that cryptocurrency could change like all of society, and regulation of that maybe prevents its widespread adoption. And then maybe find just a general impact of cryptocurrency that it might have on transforming societies, help fighting against oppressive government institutions, and why just regulation in the United States would derail that kind of progress. I think that's another way of like not having to get into heavy econ impact debate. Yeah. Any other questions? Yeah, so how would you simplify your arguments for judges, but not simplify for your opponents? I think that's a good question. So I do think that though, like, even though like the topic of cryptocurrency is kind of a little bit more complex and just understanding a lot of the things is more complex, I actually don't think that there are like a ton of arguments on the topic. So I think that like just in general, like having a really good understanding of your topic and a good explanation of your topic is like really important. And I think that like, I think it's more important for the judge to understand your argument than to try to like trick your opponent into not allowing them to understand your argument. Because if you can't explain it to the judge, then you're not likely to win the debate, right? And even if your opponents know what argument you're making, I think if you have that level of understanding of the topic, I think it's just a better way to win a lot more debates. Okay, so somebody asked, could you explain the climate impact argument again? How valid would they be? Yeah, so as we talked about before, cryptocurrency, the way in which it operates is through what's called mining. So basically it's like, imagine like we're all on computers right now, and I wanted to send, let's say Stefan, some money like on cryptocurrency. Well, in order for me to do that, it would be like everybody in this room and people around the world would verify that transaction, that like I had funds in my account, that I'm sending it to Stefan, that Stefan received that money, right? It's verified, and that's created in the blockchain. And in order to incentivize people to do that, like cryptocurrency services, they like you can make money from mining, right? So you can get like a small amount of money or a Bitcoin if you help verify other transactions, if you mine, right? So there's people with like supercomputers that just use their computer to verify transactions and make money from like cryptocurrency mining, like verifying these transactions. But it's like very energy intensive, right? And there's a piece of evidence out there that like cryptocurrency, and I think it was like 2018 alone, like contributed more greenhouse gas emissions than like the entire country of Ireland, right? Like it's a lot of greenhouse gas emissions, because these computers, like it's not just really like normal computers, it's like very powerful computers. They use a lot of energy, and just in general, right? Like the energy that you use to like plug in your phone, it's generally not coming from renewable sources, at least yet. It's usually coming from like a power grid, which is based in with like fossil fuels, right? And so like it's bad for the environment. And so there's been proposals of certain types of regulation to make cryptocurrency more green. So like mandating that people who are mining have an renewable energy source of power that like are used to powering their computers or something. Yeah, does that make sense? Do you consider making an observation about types of regulation, which ones to take into consideration and which not a good idea? Yeah, I do. I think it would be a good observation. Again, though, I don't think you have the ability to just say like, oh, I'm only defending regulation based on the environmental impacts of cryptocurrency. I don't think that's like enough. I think if you were to make like that type of argument, you would also need to say like, here's some evidence that like not only that these are the types of regulations that are the most likely to happen. I think if you wanted to make a specific argument, that's how you would do it. Absent that, I think like it's kind of abusive, and I don't think like a lot of judges will believe it because there are no plans in public forum. And if somebody says like, oh, that's a plan, you just say like, no, it's not a plan. We're just showing like likely forms of regulations that are likely to happen if the US were to pass increased regulation on cryptocurrency. Yeah. All right. Any last questions? All right. Awesome. Well, thank you so much. Best of luck debating in November and December, everybody. I know this is a little bit more complicated topic, but it's good for you to all kind of start thinking about it, sooner, right, as the topic was released. So best of luck in your debates in November and December, and let me know if you have any additional questions. Make sure to subscribe to Debate Us.